So are you looking to tap into the equity that's built up in your home, but you're not sure if you should refinance or take out a home equity line of credit, also known as a Heloc? Well, in this video, I'm going to go over the pros and cons for each and show you what option may be best for you. So when it comes to tapping into the equity in your home, you have two options. You can either refinance, which means you're restructuring your mortgage. You're essentially adding more of a mortgage debt in order to tap into that equity. The second option is to have a home equity line of credit. And there's actually a third option where you can have both. You can get a mortgage product that has both the mortgage and the Heloc tacked on as well. So I'm not going to go into the details of how you qualify or what that all means because it's far too complex and it really doesn't matter. Now keep in mind you do have to qualify and there has to be enough equity in the home for that Heloc to be attached as well. So if you do want to understand how much you can tap into or what a Heloc is, well, I do have a video that you can check out. You can see it up above here. If you want to check out that video, I do a deep dive into what a Heloc is and how much you can access, how much equity you can access in your home using a Heloc. So in the case where you're either choosing between a refinance or a Heloc, let's go over the pros and cons for each. So when does it make sense for a refinance? If a client's coming to me and they're looking to tap into their equity to buy an investment property, I usually recommend they do a refinance. The reason being is, let's say they're taking out $100,000 to purchase a $500,000 rental property. That money that they're taking out is typically going to be long-term debt, meaning if they're holding on to that investment property for say 10, 15 years, that's long-term debt. It's going to be sitting there for a while. So I would highly recommend that they go with a mortgage because the interest on that is going to be lower versus the Heloc interest. Now, with that being said, if they are strictly going for cash flow, this option may not be the best because your mortgage payment on a refinance is going to be higher than what the Heloc payment would be. That's because Helocs have interest-only payments. So I typically recommend a Heloc for short-term debt. So an example of short-term debt may be, let's say you're tapping into the equity in your home because you want to do a kitchen renovation. Let's say that kitchen reno costs $15,000 to $20,000 and you know within a year you can pay off that debt. Well, then a Heloc may make sense. An added benefit of the Heloc is that you can pay it down at any time you want. You're not going to pay a penalty in terms of paying that down. Unlike a refinance where you have an actual mortgage in place, and if you wanted to pay that off, you'd be breaking your mortgage. And when you break a mortgage, you're incurring a penalty. So circling back, pro of a Heloc is that you can pay it down at any time that you want. Another pro is that you're making interest-only payments. So if cash flow is your number one goal, well then a Heloc makes more sense because your payments are going to be lower with those interest-only payments. So what are some examples of when you would do a refinance? If you were to buy a second home, buying a rental property, if you're consolidating high interest debt, or if you're doing large renovations to your home. Some examples of when you would use a home equity line of credit would be if you're doing small home renovations. Anything short term where you know you're going to be paying off that debt, definitely go with a Heloc. And thirdly, if you're trying to perform the Smith maneuver, well, that's where a Heloc would come into place. I'm not going to go over the Smith maneuver in this video. That's a whole nother video. Just know that if you're doing that, then it might make sense to do either the Heloc or do both. And again, doing both options, you have to have enough equity in your home to do both. And you also have to qualify on the amount for both the mortgage and the Heloc. So it's always a case-by-case basis as to whether the client can do both and whether it makes sense to go that route. So that's why it's important to reach out to a professional, someone that's in the mortgage space that does it on a daily basis for their clients, because it's not a one-size-fits-all. Every client's situation is different. So that's why it's important to seek some guidance. So that's it for today's video. If you could please like the video, hit the subscribe button down below and hit the bell icon. That would do some wonders for me and it would help me grow the channel. Thanks again and see you guys on the next video.